Hey guys, Sunday night, just want to take a look at a few markets real quick. I think overall last week, let's just start with the dollar, right? So, still the long-term tail line's 92. You go to the daily chart, it's really moved sideways now. So, you could see that there was a slight uptrend from May to really the beginning of August, right? Then we moved into a little bit of this downtrend, and now I would draw this regression channel right like this. So between -2, +2, right? I mean that's pretty clear range trade. So I think we went into payrolls on September, failed at the top end of the range. Went into the Fed meeting, failed. So the dollar is really just going nowhere. I would use this 94 area as a key pivot. If we break the bottom of this range, then you got to think about the lows from June. All right, and the same thing on the upside. If we can start to get traction above, you can see that the pi line's right up here also. So that's 96.5. So we're still in a range trade. It's going to be the same for the euro. A couple positions we have pound yen, still like this one short. Pound really looks bearish. It's really moved bearish long term again, weekly, daily level. I got so much stuff on here, it's hard to see. 4 hour. The bands are rolled over, the 30's declining. Alright, so still bearish here. I think we're going to test the lows from Brexit, quite honestly. Alright, pound yen's 129.26. Alright, so still a better seller there. That's pound yen. Dollar yen, I've been thinking about playing along long term. We're lower than the monthly cycle. Weekly, I just like that pi's down here right below where the market keeps holding. I just think this is a crowded trade, everybody that's still long yen. So I don't know. Technically we're still intermediate term bearish. I'm just kind of starting to think the next move there might be back to 107. So if you want to play the intermediate term, I guess you stay bearish. I mean, we're below the pi. You broke this consolidation pattern. The bands are all bearish. All right. Here we're building a pretty heavy short, and I sold pretty well. I want to cover this. I think I have some bids in another 30 pips lower. Nice topping tail so far tonight. When we start a swing trade, we kind of like to do it on the correct side of the daily cycle. So you want this to cross back over like we had here in September. And then that gives you more of a chunk of time that's more bearish. So I still think we might test 156. So I'm trying to be patient. What you guys can see here, I mean, I started selling pretty early on the hourly. All right, and all these sales were out of the money, and then we hit it harder up here. I mean, I was selling 200,000 lots here, selling $1 million up here, and that allowed us to cover stuff well in the middle of September. Now it's the same thing. So out of the money currently on this position. All right, but we'll trade it around. If we get back here, I'll cover some. When we move back up, I'll resell it, and that'll bring my average for this trade much higher. And we'll see if we can roll back over under the 153s. Okay, as far as stocks, I was pretty vocal about we could fail up here around pi. And again, these are areas, there's not one specific level, and so we did kind of roll through it. And this is what I want to see, is this daily start to cross. Then we have a better, higher probability of seeing a sell-off into October. Alright, but this is a key pivot. I mean, if we get back above these highs, I'm just going to get flat. It's just long term, it's S&Ps are still in a bull market. Every sell-off is just met with more. It's just, these sell-offs are just brief. Even after Brexit, it was one week down, not even that. It was 2 days down. All right, gold. Gold held the long-term pivot down around 1310. So it's still very bullish. I'm sure there's plenty of capital chasing it now that it held again. All right, so keep buying dips there. Same thing on silver. We bought well both times down here. The long bond, I'm back long there. I just like that it held the 200 day. All right, you were able to take out these highs. The wave formation's back bullish on the hourly. So I'll be a buyer down here at 166 3/4, back to 166.07. Fives, here I highlighted last week. If you get another push up here, I'm going to add to my short 5-year position. So that puts me in a flattener. You want to sell the front end, buy the long end. So we're long 30s, and I'm trading around from the short side on 5s. So I sell here, cover, sell here. I sold here and here. My average is right there, so I'm out of the money. That's why that's in red. If you get another push up, I'm going to add to it. And then my average cost will be kind of at the top end of the range. In the next sell-off, then I'll get some back. If treasuries sell off, I'm also going to add to my 30-year position. All right, and then just lastly, oil, still a range trade. See, I didn't sell anything up here. This was a little bit oversold. We were lower than the cycle on the hourly, so you cover some stuff well on Friday, then we can put it back up, put it back out higher. So I'm thinking 46, 47 to resell there in oil. But overall, it's just a range trade. Big picture range 53 to 41, and then inside of that's more like 50 to 43. You guys can see the trend here, or not. What the heck? I don't know, I can't draw it for some reason. There it goes. So this is one standard deviation. That's kind of giving you the range, 43, 46. If you widen it out to 2, which is what I like to use, 41 to 47, I think that's about right. So you can play it in the middle here, the closer range. Just play it smaller. You want to kind of really keep your size at the wides. Right? So we want to be a seller at 47, 48, and then look to cover into this range. But I'm not going to be getting long oil for a while. This is still bearish downtrend. Alright guys, I'll talk to you all in the morning, and we'll go over some more markets then. Alright?